Hello and welcome to Distributed Systems and Blockchain in the News. My name is Thomas Bocek, and this week we have the following news. It's about the Mongo market hack. And I was researching this hack. I found the following article which explains this hack, how it's going on, what happened. So in short, the Mongo market hack. Mongo is a trading platform, is also fruit, but it's a trading platform on Solana. Solana is a blockchain which is quite popular, quite famous for their low fees and fast execution times. It's in CoinMarketCap, it's in the top 10, and it's quite popular for its low fees. And on this platform, you can trade coins, assets, and also you can trade perpetuals. And the question is, what are perpetuals? I was also looking into that, into perpetual contracts. And those are contracts between two parties that either want to sell or to buy an asset at a fixed price with an unknown execution date. It's similar to options or futures, but options and futures, they have a fixed date in the future where you need to execute this trade. And these perpetual contracts, they don't have a fixed date. So this can basically live on forever or continue until eventually this position is closed. A good explanation of such a perpetual contract is on this site. It also has an explanation, an example of how it works. Here the example how to make profit. So it's basically the following. We have a perpetual swap contract here. Currently Bitcoin is trading around 20,000 US dollars, so the perpetual swap will also have this price here, so you can trade one Bitcoin against roughly 20,000 US dollars. It's more or less the spot price, and there needs to be a trader who thinks that the price is going down. It's called the short trader. There needs to be a trader who thinks that the price is increasing. This will be the trader for this long position. And if they find each other, then you can actually start this perpetual swap. And typically on those crypto exchanges, every 8 hours the price here is adjusted to be close to the spot price. So if it increases, funds from the short trader go then to the long trader. So this is called funding. So either you receive or you pay funding. So if the price goes up, the funding goes towards the long trader, and if the price goes down, then the funding goes to the short trader. And most exchanges I have looked into, they evaluate this roughly every 8 hours. In order to not run out of funds, you need to deposit a collateral, and the collateral covers those fundings. So that means you don't, if you open such a perpetual swap, you don't need actually one Bitcoin or 20,000 US dollars. You can have a fraction of that, but you need something collateral to cover for the funding. And once the contract realizes, hey, you're running out of collateral, it will liquidate your position and use this collateral to fund the other party, and you will lose the collateral. So there's a short trader, there's a long trader, there is funds moving around, and once this funds is depleted, and the collateral cannot cover it anymore, then a position gets liquidated. That means you can trade cryptocurrencies with the multiplicator, so you don't need to have one Bitcoin or 20,000 US dollar. You can use a fraction of that. So in the Mongo market, you can actually trade with the leverage of 10x, the initial leverage, and maintenance leverage is 20x. So that means you don't need to pay the 20k. So you actually need to only buy or provide 2k and then trade basically with these perpetual contracts much higher values. That means you will have a leverage, you can gain more, but you also can lose more. And this is what happened. So there was two accounts. So there was one attacker. He opened up two accounts and provided a collateral of 5 million US dollars, and he entered the two position, one short, one long, and opened up this contract. And so one thing I forgot to mention is, so here I mentioned the price of this perpetual swap. It needs to adjust to the spot price, and the spot price is the currently traded market price. And this is what the hacker also knew, and what the hacker did was he pumped the price with a few million US dollars by 2,400%. So he pumped up the price from a few cents up to almost $1. This incredibly increased the amount. That also means here on that side, this perpetual swap is also now traded at a much higher price, since the price of the Mongo increased. So here this price needs to be adjusted as well, and with the multiplicator you even can gain more out of that. He was able to do that because the Mongo market had low liquidity, so only with a few million USDCs he could actually pump up the market and increase the price of the Mongo significantly. And he then achieved with his initial 5 million, he had then on the long position, since the price increased that heavily, he had on the long position unrealized profits of 420 million. So the perpetual swaps had here on the long position a huge profit, and based on this unrealized profits, he could take out loans, what he did. So he used this unrealized profit, this 420 million, for taking out loans from the Mongo platform, basically on all the coins. And by that he could drain basically all the liquidity, was something like 120 million US dollars. So he drew all the liquidity out due to the pumping of this coin, and so he could take out more than 10 times of that what he invested. Here the 5 million, here a couple of million for pumping the market. So these tweets provide a bit more detail, also the links to, since everything is on chain, so you can take a look at it, how he did it, what he did it. Here we saw that the price spiked here, it was traded for a few cents, and then he was able to manage to spike up the price almost to $1, and in the end he had an unrealized profit of 423 million, and he then just took out the loans with this heavily overpriced asset. And interestingly, so that was on the long position, and now everything crashed below even the market that we had before. So now even on the short position, he has also huge gain. But I mean, since the liquidity is gone, nobody can pay that. And this was also quite an interesting statement. Um, Mongo wasn't hacked. It worked exactly as intended. So this is a statement here from CoinDesk. Um, and they also referenced these tweets here, also explain how this went, how the hack was being fabricated. However, I did not fully understand the 5 million collateral. So when I was researching those perpetual contracts, so one has to pay the collateral in case of the liquidity or the price gets so high that you cannot pay those prices anymore, then your position gets liquidated. So I would have expected that the 5 million would be, once this exceeds the 5 million, the short trader would be liquidated, then the long trader would get the money, get those 5 million, and then that's it. But somehow this didn't happen, and so it resulted in a long position with had huge unrealized profits. Also, very interestingly, this was or seemed to be a known issue, which is this tweet. So the guy here actually asked on Discord the question that already took place in March, and he basically explained how the hack could happen, which actually was exactly how it did happen. So he explained it, that this could be a problem, but there was no reaction on that. So I guess the issue was known before. It was communicated, so just somebody had to have the right amounts of funds. So you need to have the collateral, you need to have 10 million, a bit more than 10 million to launch this attack. But it seems to pay off since you get out more than 100 million US dollars. The next article is not from the crypto world. It's about an HTTP crash course nobody asked for. Funny title, but I think the beginning of this article is very interesting. So it shows how HTTP works, even with examples, and also for TLS. So the beginning of that article I find very interesting, for sure, for the distributed systems lecture, where we also look into that stuff. Later on, he starts with Rust. So this is more of an advanced topic for the Rust enthusiasts. But the beginning, as I mentioned, I think it's quite worth to take a look into that. The next article is about Terra Luna, about Do Kwon. This is a follow-up. It's the following article here. There are users trying to trace down Do Kwon, where he is. This is a Discord group, has over 4,400 members, and they're trying to figure out where Do Kwon is. The best guess, or their best guess, is that it's Dubai, but actually he won't reveal himself. He's still saying he's not hiding, and he also is giving interviews. So the interview here, it's on YouTube, happened a couple of days ago, and there's also this question about his whereabouts. roughly here.
Industry-leading compliance, market intelligence, and investigation support for all crypto. A South Korean court has issued a warrant for your arrest and even said that Interpol issued a red notice for you, which is a request for law enforcement worldwide to arrest you. Why have you not returned to Korea?
Well, so just to set the facts straight, we are currently made a request to check on the status of the red notice. But as far as I understand, it is not an international arrest warrant, and it states so explicitly in its website. So, every sovereign nation can interpret a red notice the way that it sees fit.
So he says that this warrant is not cannot be enforced in the country he's currently being, and he also mentioned that this, I think it's quite interesting, why he's not showing up. It's not in the interest of being on the run or something like that. I don't want to disclose where I live. It's just that every time the location where I live becomes known, it becomes almost impossible for me to live there. So again, the authorities, they have issued a warrant, though Kwon insists he's not on the run, so the status is still the same. The following two articles are about hacks, about crypto and DeFi hacks. The first one is an interview with a research director of research at Chain Analysis, and he said something interesting. So it's mainly because of this quote, and this is the quote: "This can't go on in the industry because people are going to lose faith in investing in DeFi platforms." This as a reply to all the hacks that happened so far. So that's the following article. Also quite interesting is the article or the tweet about all those hacks. They're categorizing those hacks. And we see that the bridge hacks are by far the largest ones here, then lending, then DEX and SEX hacking, but by far the largest hacks are bridge hacks, including the Ronin network hack, Poly network, or recently the BNB bridge, where $500 million was stolen. So what is a bridge? A bridge is used if you use multiple chains and you want to transfer the asset from one chain to the other. Since this is not supported, you need some kind of bridges that support that, which is basically you lock the funds on this side, get the proof that the locks are funded, and see or transfer the proof to the other chain and unlock funds here, so the funds can be used on this other chain. This is a bridge, goes in both directions, and with that you can transfer assets from one chain to the other. And this has been exploited quite a lot of times. And also quite interesting is that was mentioned here in this Cointelegraph article, who is also reporting on this cross-chain hacks, cross-chain bridges. And the interesting quote here is that it also appears that the vast majority of cross-chain exchange exploits that have happened so far took place on the Ethereum virtual machine blockchains. However, I have shown the last time that most of the DeFi projects actually use Solidity and is EVM based, so I don't think it's a coincidence that most of those hacks actually happened on an EVM. I don't think it's a problem of the EVM. I think it's due to that the EVM is so popular. Most of the total value locked we have seen so far is on the EVM, so also naturally these hacks happen on the EVM.